if you're listening to this, just give me 15 seconds so I can convince you that you need to watch this video, all right? You guys need to learn how to make a trading system, right? Which includes many things. For example, your risk management, your trading models, your entry models, your scaling, your drawdown, all your kind of aspects that go into your trading. Anything that would be covered in your trading needs to fit under your trading system. Now, I'm going to be going over my trading system and how I would recommend someone to go about making their own. You can kind of use mine as a framework. It's going to be very individualized. I'm not going to be teaching any specific concepts, but I think this is the most important thing that someone would need in order to actually start improving their trading. So let's get into the video. Okay, so like I said, I think every single trader needs to have a well-defined trading system, all right? Now, a trading system is, the way I like to say, is your entire framework of trading. What you do when you wake up before you trade, the first thing you do on the charts, right? Some psychological reminders that you want to have, your pre-market plan, your during the market plan, your post-market plan, your entry models, trading models, risk management, money management, journaling, everything encapsulated in one system, right? That's your entire trading system. And the reason I think it's important to outline this entire system for yourself is so you know exactly what you're going to be doing all the time, right? You don't want to ever be lost or kind of not know like which kind of path you're going down, right? You want to have everything planned out. You want to have your models well defined and outlined, your entry models well defined and outlined, and kind of framework that whole concept. So I'm going to go over my trading system, and I won't break down each part too much, like for example, each entry model, but I will go through over these 7 steps. So my 7 steps is my psychological routine, my before trading routine, the pre-market analysis, identify an entry model, execute an entry model, and then my post plans are my risk and money management system, as well as journaling and improvement. So something I want to cover before I get into the depth of this video is I feel like there's a lot of people who kind of say like stick to one model, stick to 2 models. To me, that doesn't really make sense, especially as an ICT trader, right? Because you can have so many models to frame the same kind of idea. For example, you can trade the market maker buy and sell model. You can look for a daily power of 3, a 10 a.m. power of 3. You can trade accumulation, manipulation, distribution. You can trade open, low, high, close of any 1 hour or 4 hour candle. You can trade you can have a scalping model. You can look for an OTE, unicorn, 2022, silver bullet, TGIF. Like they're endless, right? And these all kind of all go around the same things, right? It's all about really context, liquidity, imbalances, the draw on liquidity, and then how you're going to manage your position, right? That's trading models. And you have a whole separate thing, which is entry models, right? ICT has 81 PD arrays, and each one of them can be inversed. And I'm not saying to use all of them. You can pick one PD array, you can pick 2, you can do whatever you want. In my opinion, it's good to start off with just one, but you can have multiple entry models. So in my trading system, I have 5 entry models, and I'm going to look to see which one is actually going to be beneficial in this specific scenario, right? So the key takeaway from this video I want you guys to take away is how to identify your trading system, your trading models, your entry models, your risk management strategy, and then I've also already made a video on journaling and improvement, but I'll kind of go over it in this specific video. So let's get to it. Step 1 is a psychological routine. So this is my psychological routine, and I actually have this on my desktop because I want to read this every single day before I trade. So a reminder before trading, and this is what I want to put to remind myself before trading. So that's my step 1. My step 2 is before trading routine. So on Sunday nights, I'll mark out the key levels for the week. So I mark out my end dogs, my new week opening gaps, daily key levels, so all daily highs, all daily lows. Sometimes I'll just make a mental note because I don't want to put too much on my chart and that kind of stuff. Pre-trading routine, so that's for Sunday night. Then pre-trading, I'll wake up at 8:30. Whatever your pre-trading routine is, put it there. Have some mechanical processing to your trading system, right? You're going to end up being like a robot at one point, and that's exactly what you want, all right? So have your before trading routine. What are you going to do before trading, right? Are you going to go to the gym? Are you going to meditate? I know some people meditate, and if that works for you, that's really good. Step 3 for me is pre-market analysis. So this is what I do pre-market. I determine the likelihood of a large expansion or a range day. whichever it is. To do this, I'll look at the economic calendar and the average daily range. Now, I'm not going to break down every single one of this, so I'm not going to talk about what I look for, but this is the kind of things you want to do, and that could be in a separate video. I'll determine if today is a trade day or no trade day, so I'll only use the economic calendar for that. For example, I don't trade the AM session of FOMC. I don't trade the day before NFP unless there's red folder news, and then I'll use my scalping model. And I don't trade the session when Powell is speaking. So then the last thing is I'll determine the likely direction of the daily candle, and these are the things I use. So order flow, PD array matrix, weekly profiles, daily profiles, and of course you need to have a narrative. So step 4, identify a trading model, okay? This is key. These are the models I use to trade. One of these models, or multiple, will be framed in every single trade I take. I'm either going to be looking for a 9:30 a.m. Judas swing AMD model, right? This is a 30-minute power of 3, and if it aligns with higher time frame narrative and bias, you can have a really large expansion. Sometimes it's not. Sometimes it's literally just a 30-minute power of 3, right? Just the short-term high gets rated, you take a look for the short-term low-hanging fruit, sell side or buy side, right? That's step 1. That's my first trading model. My second trading model is the market maker model. So everyone should know the market maker model, in my opinion. If you're trading ICT, I will go over this and how I use these specific models in separate videos later on in this channel, but for now I'm going to outline the kind of models I use. So I'm happy taking entries in any of these 3 stages, the low risk buy or sell, stage 1 or stage 2, and the smart money reversal. So the third model I have is a daily candle power of 3, right? So this is where I'm looking the opening price of the daily candle, which is midnight opening, and if I'm bullish, I'm looking to sell below at a discount array and sell above if I'm bearish. The next model is the 10 a.m. silver bullet, right? We all know what the silver bullet is for the most part. And then I have my PM1 setup for life. This is the lunch kind of scalp model, which can lead to more. But I look for a rate on lunch or AM liquidity, or a retracement into lunch or AM discount or premium, and then an expansion from there. Then I have TGIF, and then my 7th model, I qualified as overlapping models and confluence. So when these models overlap, that seems to be a really nice trade. So for example, I can have a daily candle power of 3 where the 10 a.m. silver bullet in the context of a market maker buy model, for example, right? And all of those things can align. So I'm not going to go over the details of every single one, but you can see right here, if I click this, so I bookmarked all of these, and it'll take you to each one. So these are my specific criteria, and I'm still working on these specifically. And the goal is to be changing these every certain amount of trades that you take. So I have all my models outline the criteria, the trade management, whatever I need to put under that model. So for example, my 10 a.m. silver bullet model, I need to identify a clear drawn liquidity and directional buys for 10 a.m. candle. Check. If no check, then no 10 a.m. silver bullet model. FEG formed in the direction of the drawn liquidity in the correct context. Check. Then I will use one of my entry models, 1 to 5. Check. And this is how I will manage my trade. So the next step is step 5. So now that you've identified the trading model, how are you actually going to get into the position? So for me, well, I need to identify a trading model. These are my 5 trading models. A fair value gap limit order entry, which most of us who trade ICT are comfortable with that for the most part. You're simply putting an entry order at the fair value gap that you're looking to enter off. I can have an inversion market order entry. That's actually a missed typo right there. A unicorn limit order entry, price delivery continuum theory entry, which is where I drop down to the 15 seconds to play off a pre-existing entry. And then a second stage entry, which is where I'm looking for an OTE / second stage entry of the market maker buy or sell model. So that's a specific entry I've categorized on. So this is my criteria for each entry, right? So this is what I'm going to do every single time I'm going to use one of these entries. So when you're using these entry models, and this also goes for the trading models, so these trading models and the entry models we just kind of went over, you want to ideally have in your journal pictures, descriptions, examples of like perfect representations of what it is and also what it isn't. So where you may kind of be taking trades that look like you're taking your entry model or trading model, but maybe it really isn't. And then also, like I said, your A+ examples, your textbook, where everything checks off. Put some pictures in there so you know exactly visually what you're looking for when you're looking to take these entries or those kind of framework or context. For example, in the 10 a.m. silver bullet and the fair value gap limit order entry for me. Now, it seems like a lot of information, but when you first start out, you can just have one model and one entry, right? You can trade the silver bullet model, and you're only going to use the fair value gap limit order entry. You can start off with that, that's fine. But in my opinion, eventually you're going to want to expand because, well, price is fractal. These are all kind of dictating the same kind of things. So it makes sense for me to you have a framework for multiple ways and multiple scenarios, right? And then this is my price delivery continuum theory entry, second stage entry criteria, and all that stuff. Okay, so step 6 is the risk and money management system. So this is for a funded account. And I've given this example with a $50,000 funded account with 2,000 drawdown. So this is my risk management strategy, my drawdown plan, and my scaling plan, and my risk management strategy. And these are the rules, right? So I'm not going to go over it. I'm not going to read all this. You can use this if you want. You can use it as a framework. It is what it is. I do need to add a section for taking profits. So let me put that in there. And I've been working on something, so I need to add that later. And then step 7, journaling and improvement. So I haven't filled this out yet, but I've already made a video on journaling, and hopefully you guys have seen that video because journaling is very important. Without journaling, you can't really make much progress on any of this stuff, because whenever you trade, right? And let me show you guys my journal. So when you guys trade, you want to be able to go in your journal and accurately put stuff in your journal. So what does my journal look like? Right now, this is my journal. So I'm a asset, P&L, date, and time. What's my trading model? Which one of my models did I use to trade? Was it none? One of the trades I took this week, there was none. You can see I lost that trade. The only losing trade, except from today. So the first losing trade I see on the account, I actually didn't have any trading model. I took a trade and I realized that there was a fair value gap, and or it was right here. I took a short or a long, I don't remember what it was. It was a long here, and there was actually no entry model, right? And as for the entry model as well, there was also none. So I broke 2 rules without even realizing. And at the time, I was trying to enter off a price delivery continuum, but we never actually had the 1 minute fair value gap form. So I broke one of my criteria for that entry model, which is, well, I lost a trade. Luckily, we managed to manage the risk really well on this one. So you want to be able always look. So in this trade, had a market maker stage 1 and a 10 a.m. silver bullet. The entry model was an inversion fair value gap market entry. These were the confluences, and these were my notes. So over here, right, your fair value gap, and then I took a market buy right here off the order block and the fair value gap right there, and you can see we went straight to the TP. It was a really nice trade. So that's the kind of stuff you want to put in your journal. So you want to have, what trading model did you trade with? What entry model did you trade with? What were the parameters of the trade? And all that kind of stuff. So I hope that helps some of you develop your own trading system. Feel free to use whatever you want from mine. This is just my personal trading system. You're going to have to know what works for you and what doesn't work for you. All of this is back tested. All of this has data behind it, right? I didn't just pick these models, entry models and trading models. I like these ones because I'm able to identify them. I like the context they give, and I'm just very familiar with these. There's many other ways you can go about it. You can make a model strictly on the opening range gap or new day opening gaps, right? For me, this is what I like, and this is how I framed it. The important part of this video is you need to make your own trading system, identify your entry model or models, and your trading model or models, right? Identify your full risk and money management system. That way, when you go to your journal, because the journal is how you improve. If you don't journal, you're not going to improve. You go to your journal and you identify exactly where you went wrong. Was it your risk and money management system? Or did you just lose? Did you identify a correct entry model and a correct trading model? And this is supposed to say trading model. So did you identify a correct trading model and an entry model? Did you follow your risk and money management? Did you follow all the steps of that entry model and trading model? If so, well, there's no worry then, because you followed everything. And all you have to do now is go to the next day. But if you broke one of those little confluences, well, you got to write that down. Journal it. Understand what maybe emotions came when that happened, right? So that's the kind of idea of this video. I hope this video will help some of you identify where your kind of weaknesses are, as well as some of your strengths. Hopefully you guys can put all your thoughts together. I know ICT has a lot of concepts, a lot of ways to look about the markets. It's important to find a way to break it down into a simple context, contracted, whatever that word is, putting things all together in one place so you can go about your trading and actually improve. GatieTrades signing out. Peace.